What's up, everybody? Welcome back to the channel. Welcome back to my personal finance channel more specifically, but my name is Kyle and I like to talk about anything finance related. And today, more specifically, yet again, we're gonna be talking about ETHE, Grayscale's Ethereum Trust, and why it was trading down 22% today when Ethereum was up over 30% over the weekend. So Ethereum, cryptocurrency, it's an asset that trades 24/7, which means that even when the stock market is closed, it itself is trading on other cryptocurrency exchanges, right? So you can go to Coinbase, you can go to Kraken, you can go to Binance.us. I'm sure there's other ones out there, and you can buy Ethereum 24/7, whenever you want, right? It's never closed or not tradable. Now, ETHE, Grayscale's Ethereum Trust, this is only available during market hours. It's effectively an index fund or a fund that is only open during market hours. This is Aston, my dog. Welcome him to the channel. He likes to join me. He just woke up from a nap. So back to the point. Grayscale's Ethereum Trust. This thing traded down 22% today. It was trading at about $15 a share. Meanwhile, the way you want to look at these funds is based on a NAV, and a NAV is a net asset value, and this tells you basically how many shares outstanding there are for the fund, and then you look at how many Ethereum it owns, so basically how many shares of Ethereum, if you want to put it like that, and then it finds where the actual price of the fund should be in the market based on how much Ethereum it owns and how many shares outstanding there are, right? So let's do a simple example, right? Let's say I have a fund and I buy one Ethereum. Pretty simple, right? So I pay $1,000, I have one Ethereum. Now what I do is I open up a fund, just like Grayscale has their, or a trust, whatever you want to call it. But basically, I open up this entity that trades on the open market and has shares. So if I issue 100 shares, it means that 100 different people can go out and buy exposure to this one Ethereum that I own, right? So the idea is, if I had one Ethereum that I bought for $1,000 and I have this fund and I issue one share, that share should be worth the same as the one Ethereum that I bought. So if Ethereum's worth $1,000, then the one share I have in my fund should be worth $1,000. Now, if the price of Ethereum trades up to $2,000, then the price of my one share fund should go up to $2,000, right? It should be a one-to-one correlation. Now, let's say, for example, I want to be able to give multiple people exposure to Ethereum. So what I would do is I would have my fund, I would go buy one share of Ethereum for $1,000, and then I would issue, let's say, 100 shares. Then 100 people could buy one share each, and those 100 people would have 1/100th of the fund, and therefore 1/100th of what I own in the fund, which is one share of Ethereum times 1,000, the price of Ethereum, which is $1,000. So if you divide 1,000 by 100 shares, you would get to a price of $10, meaning the net asset value of the fund is $10 per share. Now, if you understand where I'm going with this, basically what I'm saying is that what people pay is for exposure to Ethereum. So if there's 100 shares, they're each paying $10. 10 times 100 adds up to $1,000. That equals the one Ethereum that I have. Now let's say the fund owned 2 Ethereum. I decided that the fund is going to own 2 Ethereum, which is $2,000 total, right? One Ethereum's 1,000, so 2 of them would be $2,000 total, and there's still only 100 shares. Each of those shares would then be worth $20, right? Because 20 times 100 is 2,000 or $2,000. Therefore, 2,000 in Ethereum value, 2,000 in share value. You want to have market price the same as the asset price, right? The net asset value is $2,000. The assets that I have is 2 Ethereum assets. The value of them is $1,000 each, so $2,000 is the net asset value, and the market price should reflect that. Now the problem is that there's only 100 shares. So let's say 101 people want to have access to this fund. Well, that next person, that 101th person, right? Say there's 100 people that own shares, but there's one more person that wants to own it. They might say, well, you know what? Because I can't buy Ethereum in my Roth IRA or my Fidelity account because they don't offer exposure to Ethereum in that account, I want to buy this Ethereum Trust because I can't buy Ethereum directly in my Roth IRA. They might say, you know what? Based on the tax advantages in my Roth IRA, for example, I think it's worth a premium. So even though the net asset value is equivalent to $20 a share in the open market, that next person, the 101th person, might say, well, I'll pay $21 instead of $20. And then one of the holders of the shares might be like, sounds great to me. I just made a premium on my share because the net asset value is only 20 and I can sell it for $21. Fantastic. Now let's say there's 30 other people that are all competing for shares, right? So there's 120 people that want to buy my Ethereum Trust shares. Well, what's going to happen is it's basically a bidding war, right? Supply and demand. There's limited supply, only 100 shares, but demand is 120 people that want to buy these shares. So because of that, basically people can say, well, I'll sell it to you for $25 or $30 or even $40, which is exactly what's happening with the actual Grayscale Ethereum Trust, right? Instead of people saying, well, the net asset value is only $7 a share, the market price is $15, meaning it's trading at 100% premium based on what the actual NAV is, which is kind of crazy. Like I wouldn't pay 100% premium. Someone might, clearly someone is. But that's why it traded down 20%, even though Ethereum was up 30%. And the reason is because it was trading at 100% premium. So today, Grayscale's Ethereum Trust, I believe, traded down from like $15 to $12 and change. And if you look at the net asset value, it went up from $7, I think, to $10. So if you do look at the net asset value, it is rough. I mean, it works out in this situation where it's roughly, I think, what, 1/100th of the price of Ethereum, right? Its NAV is roughly $10, which you can see in the screenshot directly from Grayscale's website. They tell you every day what the NAV is and the market price, and you can calculate the premium. But we can see that the net asset value is only $10 and it's trading at a premium. Now that premium in some cases might be worth it. For example, I own Grayscale Bitcoin Trust and I bought that at a premium. If you buy it right now, you'd be buying it at a premium. But the idea is I can own it in my Roth IRA. Now I know that there's more ways, there's more Roth IRA, I guess companies that are offering Roth IRAs where you can own like Bitcoin or Ethereum directly. And sure, you can go out and open an account and have all that ready, but out of convenience and its availability, I bought GBTC in my Roth IRA, which means that any price appreciation is 100% tax-free. So even though I bought it at a premium, I'm already in the money, meaning the net asset value is above what I paid for GBTC. So I'm already profitable. So even if GBTC trades down to what the net asset value is currently, based on the amount of Bitcoin that Grayscale holds, I would still be profitable, right? It would have to trade at a discount. So with Ethereum today, you saw sort of price convergent. The market price traded down, the net asset value came up, and it's still trading at a premium, but that premium is less than what it was. So instead of being 100% premium, I think it's closer to like a 15% premium. So if you were thinking about buying, it makes a little bit more sense now because that means Ethereum only has to rise $100 or $200 before you're at price parity between the NAV and the market price. But that's why it's trading at a premium, and that's why you saw the price come down even though Ethereum went up. And I hope this makes sense. If it didn't, leave a comment down below and I'll try to clarify it more or make another video. But the idea, the big takeaway, and all of these funds publish their NAVs, is that what you're paying, the market price, should be as close to the NAV as possible. Now, in theory, if the market price is ever less than what the NAV is, unless there's some weird phenomenon going on, you might as well buy that because you're buying it at a discount and it should go to wherever that NAV is, right? You should have that parity. Now, the problem with that is you could have Ethereum trade down and then the price never goes up and it still hits. But if you can buy it at a discount, you're in theory getting exposure to Ethereum at a discounted price. Whereas to the opposite, Ethereum's or Grayscale's Ethereum Trust was trading at a premium, so you were paying double what you would pay if you just went out and bought Ethereum just to get exposure to it through Grayscale's Ethereum Trust. But because of that 100% premium, you saw the market price trade down even though Ethereum actually went up. And that's because of that huge premium, which has now come down to only about 15%, I believe, but don't quote me on that. It might be around 20%. Point is, you're still buying it at a premium, but the premium, it's obviously in the eye of the beholder. Is it worth paying 100%? To me, definitely not. Is it worth paying 15, 20%? Maybe, because I can own it in my Roth IRA and don't have to pay any taxes on it. So it's correlated to the price appreciation of Ethereum. And if I think Ethereum is going to go up 50, 100% over the next year, then the ability to own it in my Roth IRA with no tax consequences, meaning I can get 100% price appreciation and pay 0 taxes, sounds fantastic. Sign me up. I'm willing to pay a 15, 20% premium. Still might not be willing to pay 100% premium, but that's why you might see it trading at a premium, but why you might also see it then come down in price even when the underlying asset that it tracks goes up. So that's going to be it for this video. Hope that made sense. Hope that was helpful. But that is why Grayscale's Ethereum Trust traded down when Ethereum traded up. Anyways, until next time, guys, thanks for watching.